Something happened in a federal courtroom in Oakland, California yesterday that most investors completely missed, and it might be the most important number revealed in the technology sector this entire year. Microsoft CEO Satya Nadella sat on the witness stand in the Elon Musk versus OpenAI trial, and under oath, a January 2023 internal document was entered into evidence showing that Microsoft targeted a $92 billion return on its $13 billion investment in OpenAI. The current value of Microsoft's stake in OpenAI is now approximately $228 billion, and OpenAI just filed for an IPO that could happen as early as Q4 2026. While everyone was watching the stock market recover from its 6-week green run, while the smart money was quietly rotating into defensive positions and putting on hedges, one of the most important wealth creation events in technology history just revealed itself in a California courtroom. And there are 4 specific stocks sitting at exactly the right entry point to benefit from what happens next. Stay with me, because by the end of this video, you're going to understand exactly what the smart money is doing right now, why the market is setting up for a specific rotation, and which 4 stocks are positioned to benefit before most investors figure out what is happening. If you want real analysis built on real numbers, hit that subscribe button right now. Let's get into it. First, let me give you the market context, because it matters more than most people realize. We have just completed 6 straight weeks of green in the markets. 6 consecutive weeks without a single red weekly candle. Now, for anyone who has watched a few market cycles, that number matters. Go back through any significant recovery rally over the past decade, and you will see a consistent pattern. After about 6 weeks of straight upward momentum, you almost always get at least one red candle, a breather, a pause. The market needs to exhale before it can push higher again. That does not mean a crash. It does not mean the trend is broken. It just means the easy part of the run is likely behind us for the moment. And here is what the smart money is doing right now in response. They are not panicking. They are not selling everything. They are positioning defensively while simultaneously rotating into the names they want to own when the next leg higher begins. That rotation is the opportunity, and these 4 stocks are exactly where that rotation is going. Stock number 1, Microsoft, ticker MSFT, current price around $412. Most people look at Microsoft right now and see a stock that is down 25% from its 52-week high. That reaction tells me most people have not been following what happened in an Oakland, California courtroom yesterday. Here is what you need to understand. Microsoft invested $13 billion in OpenAI. Internal documents revealed in court yesterday show Microsoft targeted a $92 billion return. The current value of that stake is approximately $228 billion. And OpenAI just agreed with Microsoft on a revenue-sharing cap of $38 billion, specifically to clean up its balance sheet ahead of an IPO as early as Q4 2026. Think about what that means for Microsoft shareholders. The company owns 27% of OpenAI. OpenAI's valuation is approximately $852 billion. That means Microsoft's stake is worth somewhere between $200 and $230 billion. Right now, today, before the IPO. When OpenAI goes public later this year, Microsoft's books are going to reflect that valuation in a way that analysts, institutions, and retail investors will be forced to respond to. This is not a hypothesis. The IPO preparation is actively happening. The revenue-sharing cap was agreed to clean up OpenAI's financials, specifically for public market investors. Wall Street analysts have a consensus price target of $559 on Microsoft. That implies 35% upside from today's price. And those targets were set before the courtroom revelations yesterday made the OpenAI stake even more concrete. Here is my honest concern. Microsoft's core earnings declined over the last 2 quarters. The OpenAI IPO is not guaranteed to happen on schedule, and the stock has already pulled back significantly, which means the easy gains are behind us. My takeaway: Microsoft at $412 with a $228 billion stake in the company that is about to have the most anticipated IPO in technology history is not a complicated thesis. Every red candle over the next 30 days is a buying opportunity. Strong buy. Now let's move to the stock that has been coiling quietly while everyone watched the momentum names run. Stock number 2, Palantir, ticker PLTR. Current price around $144. Most investors look at Palantir and see a stock with an extreme valuation that has already run dramatically from its lows. They are focusing on the wrong time frame. Here is the reframe. Palantir is not a momentum trade that has peaked. It is a government AI platform that is becoming more essential every single day because of geopolitical events that are accelerating defense AI spending globally. Right now, the US military has 15,000 troops, guided missile destroyers, and over 100 aircraft deployed in the Strait of Hormuz as part of Project Freedom. Every one of those assets generates intelligence data. Every commander making decisions in that theater needs AI-powered analysis. And Palantir's software is embedded in US military systems at exactly this level of operation. Revenue grew 70% year-over-year in Q4 2025. The company reports Q1 2026 earnings this week, with analysts expecting 74% growth. Net income margins hit a record 43% last quarter. And here is the technical setup that makes the timing interesting right now. When the broader market takes its breather after 6 straight green weeks, Palantir historically wakes up during the consolidation phase. It has been building energy. The next push needs to close candles above $138 to confirm the $150 target is in play. Here is my honest concern. The valuation at over 100 times forward earnings has essentially no margin for error. Insiders have sold $435 million in shares in the last 3 months. If growth disappoints even slightly, the stock will be punished hard. My takeaway: defense AI is becoming more urgent every day because of real events happening in the real world. Palantir is the most embedded platform in that demand. Every red candle over the next 30 days is an accumulation opportunity for investors who can hold through the volatility. Drop a comment right now. Are you holding Palantir as a trade or a long-term investment? Because the answer to that question changes everything about how you should manage the position. Let's keep going. Stock number 3, POET Technologies, ticker POET. Current price around $12. This is the one most mainstream financial channels are not covering, and that is exactly why it belongs on this list. Here is the reframe. POET Technologies is not a random small-cap name chasing the AI trend. It is a photonics and data infrastructure company that a much larger competitor recently tried to undermine. And when a company spends resources trying to undercut you, it is telling you they see you as a real threat. A few weeks ago, a competitor acquired one of POET's customers. The market reacted by selling the stock from around $17 down to around $7. The narrative was that POET was losing ground. Here is what actually happened. The underlying technology did not change. The leadership did not change. The strategic positioning did not change. The competitor's acquisition was a reaction to POET's technology threatening their market share. That is not a negative signal. That is the most backhanded compliment in the technology industry. And the investors who bought near $7 have already seen the stock recover to around $12. If you had conviction in the thesis and bought the panic, you nearly doubled your money. Here is why POET belongs in a portfolio thinking years, not weeks. Data infrastructure is the invisible layer that makes AI function at scale. As AI workloads explode, the photonics technology that POET builds becomes more critical, not less. The competitor's acquisition validated that thesis, not undermined it. Here is my honest concern. Small-cap stocks like POET can be extremely volatile. Liquidity is thinner, price swings are wider. This requires careful position sizing and conviction in the long-term thesis that most investors struggle to maintain. My takeaway: a competitor just accidentally told you that POET's technology is worth acquiring. Customer relationships to neutralize. The stock recovered from 7 to 12 and the thesis is intact. For long-term investors, every pullback toward that $7 to $9 range is an opportunity. Now let's get to the fourth stock. The one with the most straightforward technical setup, but the most complicated history. Stock number 4, Super Microcomputer, ticker SMCI. Current price around $45. I know the reaction some of you just had. Supermicro had accounting concerns, delayed filings, corporate governance questions that made institutional investors nervous. And I am not here to pretend those issues did not happen. But here is what I have learned from watching market cycles long enough. Sometimes a stock gets beaten down so hard and for so long that even with the baggage, the numbers start telling a completely different story from the narrative. And the numbers on Supermicro right now are extraordinary for an AI infrastructure company. Forward PE ratio of 12. In a technology sector where most companies trade at 30, 40, or 50 times earnings, Supermicro is building the high-performance server infrastructure that every AI data center in the world needs and trading at 12 times forward earnings. The stock has already moved up roughly 75% from its recent lows on strong volume. When you see a significant price move combined with genuinely high volume, institutional buyers are showing up with conviction. That is not a handful of traders pushing the stock around. And here is the fundamental point that matters most. Even when revenues took a temporary hit last quarter due to customer site readiness delays at several large data centers, earnings continued to grow. A business that grows earnings during a revenue dip has real margin strength. The revenue softness was a logistics and timing issue, not a problem with the underlying business. Every AI data center being built needs servers. Supermicro makes those servers. At 12 times forward earnings in the middle of the biggest data center build-out in history, the valuation simply does not make sense unless you believe the accounting concerns are coming back. And every quarter that passes without new concerns makes that scenario less likely. Here is my honest concern. The history is real. Institutional investors who got burned before will be slow to return. The recovery to $60 and then triple digits is a thesis that requires continued clean earnings and continued trust rebuilding. My takeaway: 12 times forward earnings in a high-demand AI infrastructure sector, with earnings growing even during revenue pressure. The technical breakout above key levels is confirmed. Every red candle over the next 30 days is a buying opportunity. Strong buy. Let me bring this all together. 4 stocks, 4 completely different stories, but all 4 share one thing in common. The window to get in at the right price is shrinking. Microsoft at $412 with a $228 billion OpenAI stake and an IPO on the horizon. Palantir coiling quietly while defense AI spending accelerates because of real military operations happening right now. POET Technologies, with a validated technology thesis after a competitor's acquisition, accidentally confirmed their importance. And Supermicro at 12 times forward earnings, building the servers every AI data center in the world needs. The market is about to exhale after 6 straight green weeks. That exhale is not a reason to panic. It is the rotation moment that sets up the next leg higher. And the smart money is already positioning for it. Here is the investing truth I want to leave you with today. The people who build real wealth in markets are not the ones making the most trades. They are the ones who take fewer, higher conviction positions and manage them with discipline. They know their entry thesis before they buy. They know at what price their thesis is broken, and they have the patience to hold through volatility when the analysis is right but the timing has not played out yet. Microsoft, Palantir, Poet, Supermicro. 4 entry points that the smart money is positioning for right now, before the rotation makes them obvious to everyone else. Disagree with any of my picks? Tell me in the comments. Which one are you most interested in? Which one do you think I have completely wrong? Subscribe for real analysis built on real numbers. No sponsors, no fluff, just the work. See you in the next one.